Howdy folks, James here. Quick rundown of the markets, and as we expected, we thought we might get an attempt at a V-shaped recovery on the Nasdaq and the S&P, and that's exactly what happened, straight into that order block. And I marked this down as potential C wave in my little contribution on X the other day, and that's exactly where C wave seems to have ended, a sort of a flat C, I suppose. I'm not really an Eliotician, but I do understand the principles. So we're into there. We had a sharp rebound out of there, and the question really now is, can we continue and move up? Now we've got the tariff day tomorrow and NFP on Friday, all very important numbers and matters. And it could well be the case that when the details of the tariff setup are announced, they're not quite as bad as one expected they might be. And that might just actually spur this market higher, believe it or not. But let's wait and see. For now, however, we add another long tranche down there where I've got the C marked on the Nasdaq, and we also took our first position on the S&P, so we're now long on both of these indices. Very similar picture. There's the recent low just a few days ago. We swept it fractionally yesterday and then bounced up sharply. Not quite a piercing candle setup. We needed to get more than halfway up the previous day's black bearish candle. We didn't manage to do that, but we came close, and we're holding up again today. So it's going to be super interesting with the NFP and with the details of the tariffs tomorrow. So let's wait and see. We've got good positions on both of those, and with a bit of luck they'll hold. We also bounced on Tesla, MSTR, we're long on both of those. We also took a long position on Coinbase right at the bottom. I had these blobs marked out weeks ago, and we took our first tranche at the first blob, and we took our second tranche at the bottom of the second blob there. That's Coinbase. Going on the principle that in a gold rush, most of the money is made by the sellers of buckets and wheelbarrows and spades and things like that. So that's stocks. German 30 just bouncing up a bit as well. We've been short on this for quite some time. We're no longer short on the German 30, and we do have a breakdown below this current support here, but whether that will hold or not is very difficult to tell, because if the other indices get a bit of a wiggle on, then we may have to enjoy another rally on the German 30. So as you can see, we've broken down through that support, the 50-period moving average, quite convincingly actually, and we're retesting now from underneath. That retest is crucial right where we are right this minute. So those trading the DAX, I'm not today, be watching this level at the 50 and that line very, very closely. Right, on currencies, we haven't changed our positions. We're still short on the euro yen, still short on the dollar yen, nothing on the other majors, the euro and the pound. I do think, however, that in the bigger picture, this is kind of what we're dealing with, if my internet will catch up with my voice. And we've got this range between roughly 110 and 100 on the dollar index. I think we're heading back down towards the bottom of that level. Whether we'll break that or not on first attempt, I don't know. But at some stage, I think the dollar should try and get down below this level into slightly lower levels. But for now, I think the short-term momentum downwards is because of the Trump tariffs and the desire of the Trump administration to have a weaker dollar for various reasons, and that's heading down, as you will see. The 10-year yield is also heading down. Right, on cryptos and metals, our last two tranches on Bitcoin, we did take another one at the bottom of that move down over the weekend, right down to there. Still holding there into the apex of that triangle and hoping to break up through the next angle trend line. We are holding this one so far, and the breakout pullback is currently working. With a bit of luck, that'll hold and keep going up, but we'll have to see. And then we've also got short tranches on gold, holding our long position on silver at the same time. I explained this in the last video. What's interesting about gold, very briefly, is that we get these rallies. This is a long-term chart on gold. Each one of these green arrows up represents about $500 in the price of gold moving higher. And you can see every time we get to roughly $500 from the most recent low, we flatten out and trade sideways for 3 to 6 months. You can see it there, you can see it there, and you can see it where we are right now. $500, weirdly, and I didn't know this until I was illustrating this to a class actually, $500 just seems to be a random number, but it is actually almost identical every time. So $500 up, 3 to 6 months across the page. So we've got to $500 up precisely, and now we need the meandering across the page and a small correction down to somewhere around about 2,800, maybe even slightly lower into these bigger order blocks. But really probably just down to this trend line and then sideways for 3 to 6 months, and then the next $500 move higher. So that's where we are on gold. We're now busy trading it short just to get to the bottom of this range, which I think might be round about this trend line, and then we'll be looking to trade it long and then short at the top, long at the bottom, short at the top for about 3 to 6 months. Silver will follow suit, but we do have a long position on silver, and that's a hedge against our short gold position. So we'll slowly meander out of this silver hedge. if everything starts moving down, or vice versa. We'll have to hedge the gold and keep the silver trade open. So that's pretty good setup, I think. And both of these are now potentially good profitable trades. We'll just have to manage the timing of it. Now, going across to natural gas, we've now eventually taken another short position. We got out of the long side of the hedge. If you remember, we went long, we hedged long over here. Basically, we had a long and a short position. I got out of the long position in this order block. This is a 4-hour chart, and I also added a new short position. We went short at the top of that arrow over there, and we're just meandering below it now. So currently now we have two short positions, one from slightly lower down where we hedged over here, and we have this one from up top. Target for these, once again, 3.75 and 3.5. Let's switch to the day chart. We've already visited 3.75. I'm expecting another move back down there. And then down to $3, which is this level down here. And these are the two big key levels. As you can see in the most recent trading, we've respected both of them equally. There's the $3 level. There's the 3.75 level. We've also got $3.50 in between, but it's quite clear from the way the market's been trading that these are the two key levels. If these should break, first of all, that one, and then that one at $3, expect to move down to this trend line, the 200-period moving average, and then maybe, just with a bit of luck, we could get all the way down to the longer-term trend line, down at about 2.75, 2.6. By the time we get there, it'll probably be 2.8, maybe even back up to $3. So generally a short picture, as long as we're above $3.75, $4, I'm always going to be looking to trade this short. You can see in this last couple of contracts, we're in the new contract now, most of our positions have been short, with the occasional hedge, that's those in orange, and one or two long positions. But we're still looking for the short side now, whilst we're at these very high levels. We're also short on WTI oil. I discussed this at length yesterday in my live stream with Ola Prime, and there's a video still up on the internet if you want to have a look at that. But now that we've broken out of the short-term channel top, and through these two moving averages where we took our last short, we should be heading up to the 200-period moving average. We joked a little bit in our session saying, well, oil respects the 200-period moving average all the time. And then we looked back over here in this last messy, choppy bit and found out that oil actually doesn't respect the 200-period moving average all the time. It was a bit of a joke. But generally above the 200-period moving average is bullish, below is bearish, and we're still below it at the moment, looking for a move back up towards it and then to touch it and then form a reversal pattern somewhere up here. If this 200-period moving average doesn't hold, and we've already broken out of this rising channel, but expect something like this green arrow to be followed. This is my contingency idea, and it looks like we might be trying that. First of all, the 200, and that's at about $72.70. And then the top of this channel, the skinny and the longer term one, at around about $75.60. So be watching for both of those. Still looking to angle short on WTI. Same goes for Brent Crude. Actually, if you look at Brent Crude, it gives you a slightly easier picture to understand because the 200's kind of in line with these previous swing highs over here and some of these over here. So there's more of a, I suppose, obvious resistance level here on Brent Crude oil than there is WTI. Also notice two market structure breaks almost at identical price. And that's currently where we are right at this moment. So these are day charts for both Brent Crude and WTI. But you can switch down to the 4-hour chart if you want to sort of time this entry. And I'll be looking for a 4-hour reversal candle. We don't have that just yet, holding above that channel line. So that means that this channel line is still successful in holding the price up now that we're above it. We've got another order block above here, as you can see. And we're looking for 4-hour reversal candles in some of these zones above us, remembering that we could always go back up to the top of the longer term channel right up over here and follow the green path. So be very careful with this. There is a lot of news coming out which is a bit sort of bullish for WTI and Brent Crude, as you might know if you're watching the news or reading X or something like that. So keep an eye on that. Might be a little bit volatile, but generally I think the downtrend's still intact. And then going across to 10-year yield. I did say we'd mention this, and TLT, by the way. And having a look at the 10-year yield, you can see we're moving down again. We've now broken back down through the 200-period moving average. That's pretty good news for bears. But there is a support level that's sort of been carved out or defined for us above that swing low and around this area here. So even though we're below the 200, we're not below support. But if we can break down through this level today or this week, down through this flat bottom breakdown level and down through the channel bottom, that should set off another move lower, and that will push TLT up. We have long positions on TLT, as you might know, and this will start moving up towards its 200-period moving average and then potentially higher. I think I might just exit my positions at the 200 though. I'm getting bored of that trade. So if the 10-year yield comes down and TLT moves up, we should see the dollar index come down, and we should see euro and the pound move up, dollar yen move down, euro yen move down, and we should see stocks, crypto and metals potentially get another boost higher. Well, I hope you enjoyed that. See you in the next video. Take care.
The break of dawn. pajamas on. Got charts to read and trends to spy. MACD's low, oh my, oh my. Go on, buy low, sell high. Baby, don't cry. A funky little hustle with a sweet tie-dye. Click it, flick it, make